Hello everyone, this is St. Thomas Mutual Fund. In this presentation, we're going to talk about our investment objectives, spending policies, strategic assets allocations, portfolio diversification, benchmark, and sources. About us, St. Thomas Mutual Fund is a new mutual fund investments company with a promising management specialists in analyzing companies' financial performance and being up to date with most recent news in sectors such as politics, economic conditions, and technological advances. The St. Thomas Mutual Fund management team, Jose Angel is the president chairman. He sets up mutual fund regulations and policies. Abigail Nava, she's the team manager. She tracks stock price changes. And me, Madawi Alshammari, I'm the analyst. I analyze current news on invested companies.
Hello, I am Abigail Nava and I will start by explaining the investment objectives. Our primary objective was to achieve short-term growth amidst the uncertain economic future, to give clients financial security and increase wealth by developing growth. We used the S&P 500 and Dow Jones Index Fund to track investment values. Our major spending policies was to heavily invest on corporate stocks. We did invest in some equity investments in the technology, medical, and consumer goods industries, where demand was less affected during this economic crisis. In case our high-risk investments defaulted, we invested in bonds for safety. Some but little of the fund contains a mix of high volatile and low-risk equities. We planned on doing weekly trading, but economic crisis and uncertainty caused us to ease on weekly trading. Although the fund did manage to make profitable trading during this quarter and lessen our losses in our overall investments. Our strategic asset allocation. Under market conditions, the fund invested around 11% of its assets on bonds and long equities and left around 89% of the assets in cash. Originally, the fund had planned to invest 90% of its total assets in stocks, including debt-related and non-debt-related assets. Our portfolio diversification. Since our focus was to grow short-term wealth, the 11% of what we invested was majorly on service and technological industries. The fund was not able to invest in the volume it was desired and industries planned, since there was a lot of uncertainty during the first quarter due to the pandemic of coronavirus. Our diversification. We invested 6.3% in Immunotech Corporation, and at the moment it has a 12% increase in value. It is a company that engages in the clinical development of new drugs for treatment of serious diseases. We also invested 9.9% in Ampio Pharmaceuticals Incorporation, which has an increase of 3.6%. And discovers medical treatment for common inflammatory diseases. We invested heavily on Amazon, around 19.9%, and this was our riskiest move during this quarter. At the moment, its value has decreased to 0.28%. And we can say that Amazon has always had problems with labor low morale, and is making an effect in this crisis, even though the demand for their products is high. They are being criticized for not really caring about their employee safety. We also invested 5.8% in I2 Bioscience, which has decreased 10%, and focuses on creating commercial new products that addresses many patients' needs. Now, it is surprising how most of our medical investments have generated profits, but this one has actually generated loss, a company that is innovative. And we assume that this company might have been affected by President Trump's comment of a possible UV light treatment. This company is testing for that treatment. Our second biggest investment was on bonds. We decided to invest on treasury bonds since there was a decent interest pay of 6 to 8%. We also invested in bonds involving Walmart because we knew there was a high demand for their products due to the news about toilet tissue shortages and eggs and other products. So far, it has increased 0.15%, not much, but it has not generated losses. Our third biggest investment was on Luckin Coffee, which is a coffee house company that is more popular than Starbucks in China. I cannot provide the decrease and increase value of this stock because the stock has been halted since April the 7th. Now, this is an interesting case. The COO, Jian Lu, and several employees are under investigation because they made up to $310 million in transactions during the last months of 2019. Costs and expenses were inflated significantly. Many investors like us feel betrayed thinking that we were invested into the Starbucks of China, but it looks that we were investing more into the Enron of China. And that's why we invested more in bonds since money is more guaranteed in that area.
Hello, this is Jose Angel Beltran, and in this slide you can observe the Sharpe ratio class ranking. The Sharpe ratio is used to help investors understand the return of an investment compared to its risk. The ratio is the average return earned in excess of the risk-free rate per unit of volatility. The Sharpe ratio is calculated by subtracting the risk-free rate from the return of the portfolio and then divide the result by the standard deviation of the portfolio's excess return. The Sharpe ratio adjusts a portfolio's past performance or expected future performance for the excess risk that was taken by the investor. A high Sharpe ratio is good when compared to similar portfolios or funds. By looking at our Sharpe ratio of 2.07, we can conclude that our investments during the assignment were somewhat good since we exceeded the risk-free rate and our portfolio investment has low volatility or risk. In this slide, we are going to take a look at the benchmark against our portfolio performance. So most of our portfolio is made up of large amount of service sector companies. Therefore, the S&P 500 index and the Dow Jones Industrial Average index were used as comparison. In this slide, we can see a graph of the performance of our portfolio and the S&P 500. And as you can see at the beginning of the assignment, the S&P 500 value was higher than our portfolio. And on February 24th, the S&P 500 declined sharply following the outbreak of the coronavirus across the globe, causing market participants to shift investments from risky equities to safe assets like gold and government bonds. All three major stocks indexes plunged. This was an important event and news for us, and also for our assignment, since it left us to think about how we were going to shift our investment strategy and decided to ease off on equities and start taking interest in bonds as well. As you can see, the index continued to decline with slight recoveries. But since there was a lot of volatility in the market, we decided to keep our strategy with less riskier assets. Then, on April 7th, the benchmark S&P 500 index jumped 3.4%, sending the gauge more than 20% over its March 23rd low, which tradition says signals a bull market. Real estate, energy, and utilities led the gains in all 11 market sectors. The Dow Jones Industrial and Nasdaq Composite indexes also rose to almost 4-week highs. In this slide, we compare our portfolio performance against the Dow Jones Industrial Average. The Dow Jones Industrial Average Index dropped around 8,000 points in the 4 weeks from February 12th to March 11th of 2020. The Dow House posted some significant daily point losses in recent weeks, including 1,191 points in February 27th and 2,014 points on March 9th, which have been the lowest in recent years. Therefore, as we noticed these trends on the news and on major information sources, we kept our strategy as mentioned before. And for our information sources, we used Yahoo Finance, Mergent Online, CNBC News, Bloomberg Business, among others. But these were mainly these information sources we used for this assignment.
So to conclude our choices of selections, we need to mention that we were not prepared for this economic crash, yet it was not really possible to do short-term investing and be profitable. We had to change some of our strategies in order to lessen the losses. We feel we did the best we could to keep our investors' assets value safe. And the steps that we made to achieve this target is that we decided to not invest frugally in the stock market since its indexes were at its lowest. We did invest in the industries we knew were going to be profitable amidst this crisis since they are more highly demanded during this time. We learned from this short-term trading that it is the fast way to gain profits without any overnight risk and in a short period of time. However, traders could lose all of the invested amounts since the time of entering the market might not be appropriate, as well as the unpredictable actions such as the news effects. Therefore, portfolio management should be taken into account while trading in the market in the short term in order to reduce the risk. Regarding the economic indicators, we learned that investors should track the indicators before and while investing in the market, since they are helpful to check the health of the market, such as the inflation rate that assists investors to measure the cost of the goods and services, as well as the employment indicator shows that people are investing in the market since they are getting paid by their jobs. The timing of entering the market is one of the most important factors that should be taken into account while investing, as we face the coronavirus period and how the market was affected negatively. We could lost most of our portfolio if we had entered the market a few months ago before the crash. However, we had the opportunity to enter the market after the crash to gain our profits. The portfolio simulation experience was really informative. It helped us to track the news of the companies listed in the market, as well as we had the chance to practice investing in the options. If we had the chance to use the simulation again, we would change our strategy of investments by investing 30% of the portfolio in stocks, 30% in bonds, and 40% in options. The reason why we would invest 40% in the options is that this semester is short to be investor in stock and bonds, since they are not as high profitable as the options. However, trading options has increased our level of risk management knowledge in the market. And if you have any questions, don't hesitate to contact us by our mailing address or phone number or our email address. Thank you so much.